Hey all, welcome to ShareTreck. Happy Saturday to you. In this video, I'm going to talk about the top 4 shares in the genomic sector that I would like to buy if I had the money. And also, I would like you to put your comments below on the audio quality of this video because I'm trying a few things and I want to know if it works with you. We have audiences from across the globe, and as we know, English has got different accents. I have mine, I have my voice quality, and there are certain frequencies of my voice that do not come out properly, and the acoustics in my room needs to be equalized. So there is a whole lot of work that I need to do, and I'm trying to calibrate all of these things. So your feedback is very important. So please put it in the comment whether you find that this particular video has a better audio than the other ones that you have heard from me before. I'll be really grateful to you for that. That said, let's get started. So here we have our chart for Crispr Therapeutics. Remember that each of these candles is a one-day candle, and we can see that we have had first a bullish channel on which we were going for the longest time in the recent past, and then we dropped suddenly in sympathy with the entire markets, and then we have been on an upward move, and we have more or less covered all the gaps that we created on our way down, which was in a very, very hasty fashion, 3 continuous days of drops. But Crispr has recovered more or less. So it shows that there's a lot of strength behind Crispr. The second aspect is that the MACD is crossing over the signal line, and it's already bullish and moving away from the signal line. So that's again another positive. Momentum is also above average and picking up further. So this is also another great positive for Crispr Therapeutics. So all of these make me feel good about Crispr Therapeutics. Ideally, I would like to buy Crispr Therapeutics somewhere around 44.27. But I doubt I'll get a chance to buy it at 44.27. You can see that we had a reverse head and shoulder, and then we went up. So what is the formation happening next? One way of looking at that would be to assume this to be a cup and this to be a handle. So if this is a cup and handle, then I would assume that if this is the bottom and if this is the neckline of the cup, then if I take this up, put it here, then we are looking at a price of around 80.81 as a result of this cup and handle pattern. If this turns out to be a cup and handle pattern, I doubt very much that you can have a head and shoulder in a cup and handle pattern. But overall, if it was a cup and handle pattern, then we should see the price go up to around 80.81, which is this spot out here. So that's the other theory I have why I would like to go in for Crispr Therapeutics. And let us look at the other aspect when you go into the news section out here. Here's the first news article that created a stir for Crispr Therapeutics. They announced way ahead, not June 11, but much ahead of that, because out here you'll see this article is dated June 11, but they announced before that that they're going to present in the EHA Congress, and they also mentioned that they're going to present some really good results. They were excited about the results that they're going to present. That was around 2nd of June onwards, it went up. However, during the weekend, it fell down sharply along with the markets. So that's one of the landmarks where as soon as this announcement came in, we had a rise. But when the event actually happened, it fell down. So there is not much of a change between announcing and when the event happened. So there was no reason for it to spike in between and come back down again. It's not like there was any bad news. In fact, the reviews have been really good. EHA 2022, Crispr still looks bloody good. So this is an article that I was looking at. And there are some interesting things I found in this article that I want to share with you. This is from evaluate.com. And the first thing that they say here is that Crispr Therapeutics allogenic CAR-T projects might still be disappointing investors, but at least its sickle cell and beta thalassemia asset Exacel keeps delivering the goods. The latest data on the Vertex partnered ex vivo gene-edited therapy presented at the EHA meeting over the weekend continued to suggest that it could represent a functional cure. So this is a very positive news for us. And the other thing that it's talking about is that like other ex vivo project, Exacel, previously known as CTX001, has drawbacks, including the need for harsh preconditioning regimens. This leaves room for oral competitors such as Global Blood's GBT 021601 incremental data on which also featured at EHA. However, there was positive for Crispr Therapeutics because another oral player had a stumble. Fulcrum Therapeutics dropped 39% on Friday after its EHA update comprised just 3 of 6 patients treated with FTX 6058. The group said the other 3 patients were not evaluable because of non-adherence or protocol deviation. It could be possible that they might work on the other 3 patients and come back with more results, but at least for the time being, they have had a setback. The other competition for Crispr Therapeutics is coming from Bluebird because the article here says the March of exa-cel might also put a damper on Bluebird Bio, whose Beticel looks to be heading for FDA approval in beta thalassemia, following its unanimously positive AdCom vote on Friday. The AdCom vote is the external expert group that FDA has hired to look at the data presented by Bluebird. And the article says exa-cel continues to look slightly better on efficacy than Beticel. So exa-cel belongs to Crispr Therapeutics, Beticel belongs to Bluebird. The FDA has also raised concern about a risk of cancer with Bluebird's project. I did not know about that before, but this could explain why Bluebird shares are falling recently after the initial spike, an issue that CRISPR and Vertex contender has so far avoided. So the approach taken by Crispr Therapeutics seems to be superior. So far, they are still able to maintain their edge when it comes to sickle cell therapy and thalassemia, TDT. And Bluebird is also behind in sickle cell disease. A filing of lovo-cel, as the project is known in this indication, is not expected until early 2023, a timeline that the company has stuck to despite various clinical holds. The next article comes from benzinga.com, and the headline reads 3 reasons why this analyst says Crispr Therapeutics is a biotech winner. And this is an absolutely brand new article. It just came in today, somewhere around 11 o'clock in the morning. And they have 3 points here. The first point they are saying is potential CTX001 commercialization in somewhere around 2024 can confer a first mover advantage and a significant revenue stream providing durable downside protection. Already we have a good cash balance for Crispr Therapeutics. We also have multiple huge contracts or collaborations that bring in revenue for Crispr on an ongoing basis. And on top of that, this revenue, when it starts coming in 2024, it's going to provide a durable downside protection. And Crispr would leap into the leagues of the pharma companies that already have multiple lines of revenue and more items in the pipeline. The second point they are saying is the company's first gen allogenic CTX110 could be potentially approved in 2024 and validate the CAR-T platform, which can provide long-term upside. And the third point they are mentioning is CRISPR's rich pipeline and partnership encompass versatile editing and delivery approaches, providing optionality and increasing the overall probability of success. So all these 3 points we have mentioned in our videos earlier, and the confirmation that comes in from this article is quite gratifying. However, there is a sobering headline in evaluate.com dated 13th of June 2022, and this article correlates very, very nicely to the drop that we saw in Crispr Therapeutics. It says Crispr Therapeutics second off-the-shelf CAR-T disappointment, and it's talking about CTX130. And they say one short-term response is ongoing without further intervention, while one was achieved only after a second CAR-T cell infusion. The remaining 6 responses have all relapsed, though 3 were retreated and 2 of these went on to be transplanted. As such, CRISPR headline ORR number of 50% across all doses or 70% at level 3 or above does not tell the whole story. Investors in all allo CAR-T companies will be used to this story, with Caribou falling into the relapse trap last Friday, and CRISPR itself has already suffered this tale with its lead off-the-shelf CAR CTX110, which hits CD19. Allogene, whose CD70 CAR Allo316 in phase 1 for kidney cancer, will pay particular close attention to this. So basically, the gist of this article is that most of the CAR-T therapies are having problem with relapses, and that the cure is not durable. And that's the reason why they want to be cautious about CRISPR in this particular article. But they are talking about CTX 130 and CTX 110. Whereas if we go back to our previous article, which just happened to come out today on 17th, it is talking about CTX 110 being potentially approved. Whereas if we look at this particular article out here, it's also clearly saying that CRISPR itself has already suffered this fate with its lead off-the-shelf CTX 110, which hits CD19. So they are saying in this article that CTX 110 is also not a success. Despite all these things, right, I'm still bullish on CRISPR for a long term, mainly because of the fact that it still has got the sickle cell therapy with CTX 001, which is most likely to be first off the block, given the problems that Bluebird has got. So that's the reason why I'm bullish about CRISPR. And I'm also looking at the Vertex collaboration and other collaborations it has got, which is already bringing in revenue. And they have got a huge pipeline. We have already seen the Crispr Therapeutics pipeline. Let us go and have a quick look just for completeness. So here we have the Crispr Therapeutics pipeline. CTX 001 is in clinical stage. CTX 110, 120, and 130 all are in clinical stage. And what I'm thinking is, if all of these fail, we still have got the CTX 001 going on very well. And then we have VCTX 210 also in clinical trial. And there are plenty of other candidates in the development stage. And we have collaborations. So I think that makes CRISPR a good bet in my books. So with that said, let us go on to the second candidate. My next choice is going to be PACB. And I'm looking at PACB from a short-term perspective. Mainly because I have two channels out here which I have been talking about. Earlier channel was with this top red line as being resistance, and this bottom line, which was at that time green, was serving as a support for a long time. And if we had the guts to start swing trading or day trading on PACB, maybe somewhere around 11th of May, we would have been making a lot of money out here. So it's purely a short-term play. I don't see very long-term signs at this stage. However, it's at a very low price at this point of time, and further falls are very difficult. Therefore, I think the second channel out here is likely to be durable. This green line out here at the bottom is forming a support, and it has got 3 touch points out here. I'm just going to maximize the screen so that you can see the candles properly. So as you can see, this is a green candle for today. Friday. This is the candle for Thursday. This was for Wednesday. This is Tuesday. This is Monday. And the day before, it had touched the upper circuit. So we have doji candle out here, which again has wicks touching both the ends. So the difference between these two is this is $4 at the bottom out here, 4.02, and this is 4.51. So we have got a margin of around 49 cents in which to play. So if we shave off 10 cents on both sides, that gives you around 29 cents to play with. So if there's a 1,000 share lot at the rate of, let us say we buy it somewhere close to 4.24, then we can definitely look forward to a decent amount of gain for a short-term trade. That's my thought process. This is not financial advice. This is just thinking through why I would probably consider PACB as a short term. And honestly, I think in my mind, I have not been trading for quite a while because there has not been any opportunity, and also because I'm taping these videos and the learning curve to be a content creator is rather steep. So maybe because of that, I'm now feeling that I need to do some kind of trades to make up some money for the time lost. But either way, I think this is a safe bet in my opinion for my personal situation. It may or may not be for you. So PACB would be the second one in my short list. Next one I would look at is DNA, again for short-term purposes, because in case of DNA, we are at the bottom here, which we have touched before, And also we had a doji candle today, and the range for between which the share has been moving has been 2.12 at the bottom to 3.20 at the top, and right now we are close to 2.12. so if we were to touch 2.12, I would definitely buy on the rebound somewhere out there, somewhere around 2.38, with the hope that I may get to make a few bobs on the way when it migrates towards 320. Even if it didn't go all the way, even if it moved back from 294, or if it moved back from 2.74, I would still have made some money if I bought 1,000 units. And again, 2.37 is a very small share price, so that I can have lots of thousands and probably also be eligible to do some amount of call selling and do a bit of insurance for myself. So that's what I'm thinking with regard to DNA. Again, it's all short term. The next candidate I'm looking at is Editas. You can see that Editas is still moving between the range of 9.67 and 13.14, and it has been doing so since 9th of May. And we have all been afraid because we are about 20 on the VIX, and it's not ideal to day trade or swing trade in these kind of volatilities. But when I'm looking at Editas out here and looking at how much it has fallen from its peak and how close it is at the bottom, and how far away it is from the lowest that it has ever been in the past, I think that there is a very good opportunity here for me to go into Editas, just that I'll need more money. I'll need 11.29 per share. So if I wanted to buy 1,000 shares, I need around $12,000. And that could be a bit of a problem because we're going to sink all that money in there. However, if it was to come closer to somewhere around 9.7 or 9.65, and I bought 1,000 for 9,650, then I don't mind holding on while it goes up. And if I feel that it's going to go further up, I would try to sell a call for the future price where it might be, and get that insurance in place so that if it moves down, I would make money out of the call. And if it goes up anyway, I would have contracted to sell at that price. So it would have been a deal booked in advance. So that's how I'm looking at Editas. So these are my 4 picks for right now, assuming that I get money from somewhere and I want to invest it in genomic shares. These are the shares I would pick: Crispr for the long term, and I would have PACB, DNA, and Editas for the short term. Editas seems like a good bet, just that it costs more. I selected PACB because it's very, very inexpensive. If I wanted to spare some money to trade 1,000 shares of PACB, it's just going to cost me under $3,000. So that's a very reasonable risk that I could take. Everybody has a different situation. If someone has a multi-million-dollar portfolio, then $10,000 would not be much. They can go for something like Editas and try to do some earning out there. Because sooner rather than later, things have to turn around. The Biden administration is already working on some kind of negotiated settlement for Russia. They're also tightening the screws on Iran to release more oil once they sign for that new nuclear deal. And they're also putting pressure on companies which are dealing with Iran from the Middle East and China to make sure that Iran doesn't walk away from the negotiation table, given that we have the problem with Russia. So all the right things are being done to attack, in my opinion, the core causes of the inflation that we are seeing here. And also we should realize that apart from raising interest rate, the Fed is also tightening the balance sheet. And as a result, it's buying less and less of bonds, and it's not buying mortgage-backed securities. And that's going to limit how much mortgage can be given in the market. So all these things are going to cool down inflation, which will be good for risk-on assets. So that's my opinion. However, let me preface this with the fact that if you take into consideration 2 major risks that all of us have to, but it's not being spoken much in investment channels. First risk is the housing sector risk, both in Canada and in the US, because the housing sector has seen a lot of inventory piling up, and also because the mortgage rates have gone up, it has become difficult for people to apply for mortgage. So the mortgage applications have dropped, and therefore the mortgage approvals are going to drop. And this is going to lead to a lot of discounts in sales for homes. And finally, it's going to come down to people having to foreclose because the interest rates have gone up and they can no longer afford to pay their mortgage. And the price of the house when they try to sell it is below what they owe for the mortgage. So all these complications are potentially down the track. This is one part. The second part is the political stability part. We have the January 6 Commission releasing a lot of information, which is provoking the Department of Justice to start looking at the transcripts and everything. So we don't know which way it's going to go. Whatever happens, either 38% of the population is going to be happy with the outcome and the remaining are going to be unhappy, or vice versa. It's going to cause a lot of unhappiness and potentially a lot of disturbance in the environment. So that's another risk that people don't talk about in general. So we have to keep those things in mind. And finally, there's a whole bunch of almost around 70 odd countries across the globe, some small, some medium, who are almost bankrupt. The shortage of money, shortage of inventory, all these things are causing problems here and there. So it's not a good feel. So keep that in your mind. So CRISPR, again, it's a long-term investment. So if I did invest right now, I'm not expecting to gain anything for the next 2 years at least. And when the gain comes in, I would instantly cash it up. That's my plan. Depending on what the market environment is right now, the way it looks, I think I'll cash it. If things look hot at that time, I'll continue to hold it for a longer period of time. And with that, I would like to end this session. If you liked this video, please press a like out there. And if you are not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.